to the 10th video for revision series, one shot revision video, and today one is chotu video of income from other sources. A very important head, though we call it residuary head. Yeah, please one reminder with this that so many of you are asking me, ma'am, snippets are very helpful, but you are giving only for the DT. Then this is a series of snippets. 1 minute snippets are for repeated revision, and I'm covering up all the amendments and important points. You should be careful. You all have given love like anything. More than 2,500 students have watched the video where I said 3 pointers which are important for salary. But let me give you the answer to all your queries. Definitely, once I complete income tax, GST snippets are also starting. Okay, very soon. Only 2 amendments are left for income tax. So if you have watched, you all are sharing your likes and you are sharing further, but you're not commenting below the video. Do that so that YouTube will give the boost if you feel the snippets, these revision videos are helpful. Okay, thank you so much. Chalo. Income from other sources is a residuary head, which is not taxable anywhere else, is taxable here, but it's not like that. There are few specific incomes which are taxable. Like when we started our class, the regularly, that time I said that we don't have power to charge agricultural income in India. Indirectly, we tax it in step method. But agricultural income, if you receive anywhere outside India, specifically taxable here. Then when we started with house property, I said when you let out the property, rental income is taxable here. What about subletting? I have let it out to a hospital. Hospital is doing subletting. Okay. Hospital is doing subletting to a pharmacy. So pharmacy paying the rent to my tenant hospital. That's going to be taxable in other source. When I'm giving the flat on rent with all the amenities. So the flat of the rent is house property, but all the other amenities and all other sources. So like that, there are so many incomes which are specifically taxable in other source that we have seen all this. Yeah. So in all the heads itself, we have seen that allowances, perquisites which are received by the MPs, MLAs. Huh? So they are all taxable in other source. So like that, so many things are there which are specifically taxable. For example, let me talk about interest. If you have interest on saving account, on FD, on RD in post office, all the interest are taxable in others. The moment I say interest, you should link it up with ATTTA, TTB. Ma'am, ab to abhi deduction nahi pada raha hai na. But let me tell you, there's not going to be a separate question on income from other sources. CMA exam, they do ask. But CA exam or CMA, the importance is the first question. Work out the tax in default tax regime and outside default, then only with business income other source or with capital gain other source. Other source chotu sa flexible head which will get along everywhere and minimum weightage is 4 months. So are you getting how I am discussing? I'm doing like this oral mental because this is the way you can recollect. Yeah, ma'am said this is going to be taxable in other source. Huh? I'm by becoming a CA also I'm into teaching, but by way of passion I go to university OU and give some lectures over there. So they pay me honorarium. That's not my routine income. So it's going to be taxable in other source. Director sitting fees. If director is full time working, is salary and all in salary head. Otherwise, professional income, freelancing director. But director sitting fees in other source. See, there's a very easy way of me teaching and you learning. This is the list. Read. That's not one shot. One shot is now because you have had a grip on topic. You have attended the practice batch. Now it's time to link up the things and revise. So let us see what are the specific incomes which are taxable in income from other sources. 2 reminders I want to give. Gift, they're going to ask. It's very important. So I'll teach after I complete the list. Second thing is one amendment is there in income from other sources, and that is that private company issuing the shares above the fair market value. Difference used to be taxable. That's not there now. It's not there. One table was there. We were doing example. So anyone reading from old material of mine or from scanner, be careful. Don't drain yourself unnecessary. Chalo. Let us begin quickly now with income from other sources. Specific incomes which are taxable here, casual income, winning from lotteries, crossword puzzle, added now online game. These incomes are taxable at 30% flat, no expense allowed, no basic exemption, no set off, nothing allowed, right? All dividends, whether interim, final, deemed dividend, are taxable in income from other sources. Interest on securities, income from subletting. Family pension may there is an amendment. Family pension subject to standard deduction one third or 25,000. 25,000 deduction is if you are in default tax regime. Just on the next page, I have given detailed chart. So if you opt for default tax regime, then after the employee is deceased, his family member will receive the pension. So one third or 25,000 they will get deduction. If you opt out of default tax regime, then it is one third or 15,000, whichever is lower. Director sitting fees is taxable here. Interest on all bank accounts, agricultural income outside India, undisclosed income. You remember in the first chapter we have studied undisclosed income, unexplained expenditure, cash recovered from your home, which is not disclosed. Whenever it is disclosed, it's taxable at 60% plus surcharge 25% plus health and education says 4%. So 78%. Why I'm writing 78% to help you score marks in MCQs? That all these undisclosed income they are taxable in other source. You can't say, yes, sir, I did not disclose this is my income, but it's my rental income. Can you please give me one third NAV standard deduction? Answer is no. Next, interest on IT refund is not taxable. IT refund received 10,000 is my own money which I paid extra. It came back. It's not taxable. But on refund, if I have received 1,000 interest, that interest on IT refund is always taxable here. Plant and machinery and all, if I have given out on rent, it can be taxable under business head, if not other source. Yeah, this reminds me only for business head and other source, you can compute the income with accrual system, mercantile system, or cash basis, what I taught you in business head. Open plot, when I'm giving on rent, it's always taxable in other source because there is no land appurtenant to this. Yeah, generally on maturity of LIC, whatever you get, it's exempt. But if the LIC on maturity is taxable and it's not exempt, then it will be taxable under income from others. Ma'am, when it will be taxable? Yeah, when you are taking the policy after 1st April 2012 and you are paying more than 10% premium. For handicapped, you are paying more than 15% premium. Yeah, 80 CMA also, this we will cover in detail, but just I am saying. Or your single premium or premium put together in a year, okay, it exceeds 2,50,000. Okay. Single policy premium in a year or put together all the policy premium in a year, if it exceeds 2,50,000. So the gist of this is whenever LIC is exempt, it's exempt. Whenever it is taxable, you remember, we have also done section 194 DA. If the LIC on maturity is taxable above 1 lakh, then TDS is also going to be deducted. Please link up this. So right now what I am saying, if it is ULIP, it will be taxable under capital gain. But any other LIC on maturity, if it is exempt under 1010D, no problem. If it is taxable, where it will be taxable? Income from other sources. Next is remuneration received by MPs and members here. MPs and MLAs. Yeah. Allowances and perquisites provided to MPs and MLAs are exempt under section 1070. Allowances and perquisites are exempt, but remuneration, whatever they receive, it's taxable here. Okay. Sometimes my property is compulsory acquired by government. So government gives me money, but they give me less. I ask for more, and then they give me enhanced compensation. I said, sir, it's 3 years back, 4 years back, you took my property, and you are paying me the money now in road widening project or metro project. 4 saal pehle you have taken my property. So if they give you enhanced compensation late, They will give interest on the enhanced compensation. Now see, enhanced compensation will come under capital gain. Your property is compulsory acquired, sale consideration is coming. So that's capital gain. But interest on enhanced compensation will be taxable in other source. 50% standard deduction. No one will say these are the best small pointers I'm adding, because now we are in other source. This is the 10th one shot revision lecture. You will be able to link up everything. What? LIC, if some of you are still confused, please keep patience. I'll teach you everything in deductions also, in TDS chapter also in detail. Yeah. Advance money forfeited after 1st April 2014. In capital gain, I have sold my property to you. I took the token amount. You said, ma'am, Vastu is not good. We don't want to buy. I have seized or I have forfeited the advance money. After 1st April 2014, it's going to be taxable here. Before 1st April 2014, if I have sold and forfeited the amount, it has to be reduced from the cost, and on net only indexation is done. That's a part of capital gain. Don't miss watching out the one shot revision of capital gain. All the amendments are also superbly covered in that. Okay. Next is Keyman insurance policy. Okay. If I have taken Keyman insurance policy as an employer, and if I'm giving some money to the relatives of the employee, it's going to be taxable in their hands and income from other source. URPF, the most dangerous thing in the salary chapter, unrecognized provident fund. Yeah, employer is contributing to unrecognized provident fund, and on maturity, interest also on unrecognized provident fund, employer's contribution. That all is taxable in salary, profit in lieu of salary. But my own contribution to URPF is say 1 lakh, and on that I received interest. So 1 lakh is still not taxable. I have only contributed to unrecognized provident fund and got back money. That's not taxable. But 10,000, that is interest on employees' contribution, it is taxable in income from other sources. Clear to all of you? PPF interest is exempt. URPF interest is taxable here, but employees' own contribution. Ma'am, what about employers' contribution and interest? That's taxable in salary chapter. Now, the last but most important, whenever any gift is received from unrelated person in cash means in bank also, but in amount or in kind by individual and HUF above 50,000, then it becomes taxable. Then entire amount will become taxable under other source. 50,000 total amount received from different people will be taxable. For example, oh, you like my teaching, no, you will give me Guru Dakshina, right? So 10,000 I am receiving from, I'm not going to receive, say each of my 6 students. Students gifting 10,000 each to teacher. So 10,000 I have received from 6 students, 60,000. Individually for each of you, gifting is 10,000. But for me, I am the SSE. In a year, have I received more than 50,000 gifts, 60,000? Yes, taxable. But ma'am, 50 tak to you can exempt 10 tax. Answer is no. Above 10,000 cash expenditure in a single day, disallowed. Like in the same way. Got it, all of you? Once you exceed 50,000 above, it's fully taxable. Okay? Is it clear? I'm repeating this 56 to 10, clause 10. Whenever gifts are received from unrelated person by individual and HUF above 50,000 put together in cash and kind, that's the limit for me, then everything will be taxable. It's like fully taxable. If I have received 80,000 gift, I can't say 50 tak exempted, 30 only taxable karo. Okay? Right. There are few exceptions. For example, the gifts which are not taxable. Like if you receive the gift from relative, we all know. I stand here, my father, grandfather, my son, grandson. Okay. And this side, my mother, father to aage, mother's brothers and sisters, father's brothers and sisters, my chacha, mama. So my relatives, also. So if I receive the gift from relative, it's not applicable, it's not taxable. On the occasion of marriage, not marriage anniversary, on the occasion of marriage, it's exempt. Under a gift, will, or inheritance. I'm the sole survivor of my grandfather, and by way of will or inheritance, everything comes to me. It's not taxable. In contemplation of death, same. From local authority, if you receive gift from university, so many trusts, they give the gifts to the toppers, and they give two wheelers and bikes and like that, costly gifts. They are not taxable if they are given by a registered trust. So what is exception to rule that gifts above 50,000 are not taxable? If gifts are received from relative on occasion of marriage, under a will, in contemplation of death, from local authority or registered hospital, university, trust, and all. Okay. If the gift is in kind and it is immovable property, check the stamp duty value. If stamp duty value is 80 lakhs and the buyer purchased it in 60 lakhs, when the stamp duty value is 80 lakhs, why did the buyer purchase and I sell it in 60 lakhs? That means difference 20 lakhs is gift buyer from me to you. समझ में आ रहा है? So it's, ma'am, but here consideration is there. No, this is not gift. Yeah, but 80 lakhs property, why will I sell to you in 60 lakhs? That means the difference 20 lakhs is gift. It could be in cash and kind, and it's not a complete gift here. Part consideration has come, but if the consideration is less than the stamp duty value and the difference exceeds 50,000, it becomes taxable. Relative definition you can read for HUF also, all co-partners and all. Acha, property. I said gift in kind is also taxable. So it includes immovable property, open plot, land, building, shares, securities, jewelry, archaeological collection, drawing, painting, everything excluding motor car. Ma'am, in capital gain chapter, motor car is also an asset. But for gift, if you're gifting motor car, then it's not taxable, specifically excluded. Then this table you can read on your own, nothing to revise. If it is in money, if it exceeds 50,000. If it is in property, fair market value stamp duty exceeds 50,000. If it is a property but inadequate consideration, I have not gifted it. I have sold you, but I sold 80 lakhs ka property in 60 lakhs. That's the same thing. Okay? Right. Stamp duty, kap ka lena. This we have made ourselves very clear in the capital gain chapter. That stamp duty value, if you have to take for anything, for capital gain, for business head, for here, it will be the date of agreement. The day I agree to sell you. If that day you receive, give me at least some amount, token amount by any online mode of payment. But suppose on date of agreement you are not giving anything or you are giving in cash, then stamp duty value on date of agreement is irrelevant. Stamp duty value on registration. This I think very nicely with example we have covered in capital gain chapter. Okay. See, family pension, a nice question, and all these are superb question. See, if you're listening to the lecture, I'm highly recommending you all to please join the practice batch and learn. For once you invest, you will learn concepts, you will write notes, you will write chapter-wise exam, and you will prepare thoroughly. But I can't take the question answers now. Employer gifting anything to employee, it will be taxable under salary, not other source. Okay, right. Now, acha, I missed out telling you initially only we start with chargeability and all. That whole income from other sources chapter can be covered in 3 sections. What was section 56 chargeability? The list we saw now. Section 57. What are the expenses allowed? Okay. And section 58. That is, what are the expenses which are not allowed? I hope you are getting why this is relevant. Oops, 1 minute. ये अपने आप बड़ा हो रहा, छोटा हो रहा, क्या हो रहा? Okay, just listen orally. How do you compute house property, GAV, municipal taxes? So three expenses are allowed, no municipal tax, interest on loan, and standard deduction. In business side also we do, okay, this is allowed. Even in capital gain expenses related to sale, index cost or not and whatever. Like that in income from other sources, it's a straight list. What is going to be taxable, you write in outer column, PPF interest and all exempt. But still write PPF interest 8,000, outer column may exempt. Write things crystal clear. There are 2-3 concepts and this chapter is done. But did you get what I explained now for income from other sources? Right? So now what I'm saying is 56 is chargeability section. 57 is what is allowed. So related to the list we read, whatever are the expenses will be allowed. If I have given my house on subletting, then whatever rent I am paying, or if I've kept a person like that, related expense should be allowed. And disallowed list 58, abhi I'll read out exactly same what is disallowed in business ed. It will be very clear when I share the screen with up. Chalo. What are expenses which are allowed? Interest on securities and all related expense are allowed. If you are giving machinery and all on rent and taxing income, then related to machine, repairs, insurance, depreciation. Just like your section 30, 31, 32 of business. है ना? Machinery से related repairs, insurance will be allowed. Any other expenditure which is allowed. 50% of the interest received on account of compensation that we are allowing deduction. This one is new, they can cover up in MCQ. All the dividend receipts are taxable here. Then interest which is paid related to dividend is allowed maximum up to 20% of such dividend received except 222F. अब 222F क्या है मैं आपको बताऊंगी. Right. 222F we have done buyback of shares and there. But listen carefully now. They are saying that suppose dividend received is 15,000. Now, you have taken a loan of 1 lakh rupees at the rate of 10% to invest in RIL Limited. And your dividend received is 15,000. How much interest you have paid to invest in this company? 10,000. But how much dividend you have got? 15,000. Now interest is not allowed more than 20% of the dividend over and out. 20% of dividends is zyada, interest is. Ma'am, but interest 10,000 is related to this. No, earlier it was allowed. Now they say whatever dividend you receive to invest in the shares of the company on which you are getting dividend, you have taken loan. So interest will not be allowed fully. It will be allowed maximum 20% of the dividend received. That's this. Same way in case of companies ATM deduction, I'll cover in deduction chapter, but relevant to dividends, so I printed here also. Whatever dividend as a company I am also receiving on my investments and whatever dividend I am paying, the least of this is deductible in ATM only for companies. First, deductions list is over. Very limited deductions are allowed. Are you all with me? 1 second. Examples are clear. They are printed. 222F, I will say. This one is also very nice. My own created example. And now see this. Family pension deduction is 1/3 or 25,000 in case of default tax regime. In case of normal tax regime, it's 1/3 or 15,000, which are. Aaj bhi, if you opt out of default tax regime, it's the old pension only. Right? Now the last one we are doing. These expenditures are generally asked in MCQs only. So really you can remember, like in enhanced compensation, 50% deduction is allowed. In family pension, 1/3 or 15,000, whichever is lower if you opt out of default tax regime. If you're filing your return in default tax regime, 115 BAC, then 1/3 or 25,000. Now expenditure which are not allowed, section 58 is copy paste of your business ed. What is disallowed in business ed? unreasonable payment to relative. Above 10,000 payment in a single day to single person in cash. Any payment without TDS. So that's the same concept applicable in other source also. Related expense are allowed, but if you make payment in cash above 10,000 and all, it's not allowed. ठीक है? Right, ये देखो. Deductions which are not allowed. Personal expense, interest if paid outside India without TDS, 10,000 above payment. Income tax is not allowed as expense. And all the expenses which are disallowed in business. One more concept is important here, that when minor's income is clubbed in the hands of the parent, 1032 deduction is allowed. But that is allowed only if in case of the person is opting out of default tax regime. In default tax regime, minor wala deduction nahi milega. One more concept here important is interest. Now this I want to link up and say PPF interest is exempt. Interest on saving account is exempt up to 3,500 in single account, 7,000 in joint account. And above this, you get the deduction of 80 TTA 10,000 for senior citizen, 80 TTB 50,000. That I'll teach in other source. But please remember, if post office saving account is given and if it's a joint account, up to 7,000 is exempt and single account 3,500. Many times they give income from other sources, may income received is net. For example, interest received is 9,000 net. Net, that is after deducting TDS, 90% received is 9,000. TDS rate is 10%. What is gross interest? Like that grossing up concept I have discussed here also in lottery and so many other cases. ये देखो. You have received the FD interest 10,800 is 90%. 100% is how much? 28,000 you have received. Lottery amount is 70%. 100% is how much? So 28,000 into 100 by 70. 28,000 into 100 divided by 70. It's 40,000. Is 40,000. Okay, all clear? These are very nice questions we have solved in the practice batch. And now I'm taking up the last concept here, that is deemed dividend. Okay, deemed dividend concept and related to that part and amendment and all also I'm taking. But for this, just allow me to write एक छोटा सा example लिखते हैं. ये company का share capital है 100 and suppose they have earned profit 200. Huge profits they have made. Now part of the profit 50 they will give dividend to the shareholders. Remaining profit, what is flowed back in business, is called as accumulated profit or general reserve or undistributed profits. I'm giving you all the name. What I'm teaching coming 15 minutes is super duper helpful for accounts, for your income tax as well as for your law. Deemed dividend concept. So 150, which is undistributed, undisclosed, until now you have not distributed it, it's called as accumulated profit. Now this accumulated profit anytime is flowed back in the business, है ना? This is the what do you call it, share capital and reserve or owner's capital. Now out of accumulated profit, whenever you give to shareholders any cash or any dividend or any assets or you give bonus, some kind of benefit is going to shareholders out of accumulated profit. Directly profit goes to shareholders, it's your income. Indirectly also, when you are getting money out of accumulated profit, obviously it's deemed dividend, right? So let us take the concept of deemed dividend. Any distribution by company to the shareholders, boldly I have written here, out of accumulated profit, if you give to shareholders any assets or part of the assets and all, then it is called as deemed dividend, taxable in income from other sources. Any distribution to shareholders of the company of debentures, debenture stock, bonus shares to preference shareholders. Out of accumulated profit, you have given anything to the shareholders in the form of debentures. Shareholders को debentures दिए हैं out of the accumulated profit, or you are giving bonus share to preference shareholders out of accumulated profit, or company is going into liquidation. This one is asked in exam. Company is going into liquidation and we are saying take your share capital back. Against that we'll give cash or assets. Acha, take 150 accumulated profit also, because that also belongs to you. So when the company is going into liquidation, whatever is given to shareholder out of accumulated profit, it's deemed dividend, no? Taxable in your hands and others. Any distribution by company to shareholders on account of reduction of the capital, we call it as internal reconstruction. Internal reconstruction, we call it. So whenever company is doing internal reconstruction and all, they utilize the reserves. So out of reserves, if they are giving anything, it's going to be taxable in the hands of shareholders as deemed dividend. And last one is applicable only to closely held company or private company out of accumulated profit if they give loan to shareholders, not to any shareholder, but shareholder who is having more than 10% voting right, it will be treated as deemed dividend. I'm repeating, private company out of accumulated profit is giving loans or advance to shareholders who is holding more than 10% beneficial ownership, it will be treated as deemed dividend. Or sometimes they don't give the loan to shareholder. They give loan to an HUF firm, AOP, where the main beneficiary is the shareholder. So via it's going to shareholder, it's taxable as deemed dividend. Okay? Any payment on behalf or for individual benefits a shareholder made to a person, third person, deemed dividend. Even if the shareholders repays this loan, still it will be treated as demand. This is wrong, but yeah, it is. Private company out of accumulated profit which already belongs to shareholders, why did you give loan? If you have given loan, it will be taxable as deemed dividend, irrespective if the loan is repaid or not. Exception to rule, that fifth one, it will not be taxable as deemed dividend if giving loan is their natural business. It's a finance company जिसका काम ही है loan देना, then no problem. Okay, right. And buyback of shares, I have already covered you that there's an amendment and this amendment is applicable from 1st October 2024, that if the shares are purchased back by the company, then whatever amount company is giving to shareholder, it will be taxable in his hands as deemed dividend under a new clause added, section 2, subsection 22, clause F. Detail I have given in the with a capital gain chapter. Okay. All the dividend will be taxable. Normal dividend when it is declared, interim dividend when it is received, deemed dividend when it is distributed. This is a very nice problem. Rahul ke case mein. I have given all the cases. You want me to discuss because same problem can come. Accumulated profits are 5 lakh and Rahul is having more than 10% voting for 28%. Out of accumulated profit, the company has given 4 lakh loan. Will it be treated as deemed dividend if company is a company in which public is substantially interested? Answer is no. It's only the case private company giving loan. If it is a private company, yes. But private company has given loan 5 lakh, whereas accumulated profit of 4 lakh. So till 4 lakh, it will be treated as deemed dividend. If Rahul repaid the loan, no problem. Why did you take loan from a private company? Out of accumulated profits gone, it's going to be taxable. If closely held company is a finance company, then exception to rule, not taxable. Okay. One concept is there in capital gain section 56. That's when the company is closing the door and we are saying to shareholders, take the assets, take the cash. So nothing is taxable in the hands of the company. You remember? There are few transfers in section 46, 47 which are not taxable. Now, 1 minute. I want to talk with all of you. Income from other sources is over. bye-bye. But in the last exam, after years, they have asked lump same. Like that, they can ask exactly same question in the upcoming exam. We don't know. I'm not scaring you, but it's very easy. Only concept it is saying is company is going into liquidation. They are saying shareholders take your capital. Now, whatever they give against your capital, it's your sale consideration. You have shares of the company, no? Pay capital gain tax. Take this as accumulated profit. Against accumulated profit, whatever you are getting is deemed dividend. Simple logic. When the company is closing, company is transferring the assets, nothing is taxable in the hands of company because on liquidation, assets transferred by the company to shareholder exempt. But when they are giving you against your shares and against your reserves some assets, so whatever total consideration is coming to you, out of that, whatever is coming for shares, taxable under capital. What is coming against accumulated profit, taxable in your hands as deemed dividend section 2, subsection 22, clause C on liquidation. वापस जाके भी वो clause पढ़ लो or you do it with me now. Okay? I'm not explaining the all point by point. That's in already done in the practice batch, but just see capital gain on distribution of assets in the hands of the company, no capital gain. In the hands of the shareholders, whatever you receive out of accumulated profit, that's deemed dividend. And whatever is received total out of that deemed dividend you removing remaining is your sale consideration. Your shares are getting extinguished or not. We have done a broad definition of transfer: sale, exchange, relinquishment. They are taxable. See, this is Vasumati's problem. And the day she went into liquidation, she got land and cash. But out of land and cash, the company had reserves 3950 and 1/6 share of Vasumati was 658. So whatever she has got 658, this will be taxable under. Company gave her total land assets bank balance 1058. But out of that, what has come out of way, that is in the form of deemed dividend out of accumulated profits of the company, reserves ka 1/6 share. She is holding 1000 shares out of 6000. Other source. Remaining is sale consideration, routine problem. Okay. Same problem can be repeated. Okay. ये वाला जो problem है ना जो मैंने बताया. Even this one is a very nice question. Study material में it is there. Lalit is a dealer in shares. He received a motor car 5 lakh as gift. Motor car is not included, so nothing is taxable. He received cash of 21,000 each from 4 friends. So 84,000 crossing 50. So like that, 2, 3, 4 items are given. Everything will become taxable or it will be exempt. I told you one thing. This is from the past exam. So they are having that shares, private company issuing shares above fair market value. That concept is not there now. But the questions are really good. Yeah, related to COVID, if there is someone deceased in the family member, and if so many trust and all, they reimburse you 10 lakh rupees, but your expense is 8 lakh. Extra what you get is going to be taxable. Okay? Right. Bond washing transactions, interest, dividend stripping, this is not important. So majorly everything we have covered, majorly नहीं पूरा ही आपको cover कराया. Make sure you revise it 2-3 times, one shot revision video. So many of you are writing internals, you're waiting in your colleges to write your exams and all. Then put your headphones, listen to this. You will score marks, and income from other sources is a part of mandatory question number 1. Still, if you have any doubts, you can comment below. Thank you so much. See you all in the next one shot revision video for deductions. If you want to do deductions and TDS live, join the Telegram and message over there. We'll add you in our Zoom group. All the best. Bye-bye.